Welcome to the recap of data released during last week. The week kicked off with Dallas Fed Manufacturing Business Index. The General Business Activity Index posted a seventh consecutive negative reading but moved up 5 points to -14.4. Perceptions of broader business conditions continued to worsen in November. The Company Outlook Index pushed down further, from -9.1 to -15.2. The Outlook Uncertainty Index retreated 18 points to 20.4, still slightly elevated relative to its average reading of 16.6. Price growth eased, while wage growth remained elevated. On the other hand, the Production Index, a key measure of state manufacturing conditions, fell to 0.8 points from 6 in the prior month, suggesting further deceleration in output growth. Labor market measures pointed to slower employment growth and stable hours worked.
The revised or second GDP estimate came out that was based on more complete source data than were available for the advance estimate issued last month. In the advance estimate, the increase in real GDP was 2.6%. The second estimate revised the GDP upwards to an annual rate of 2.9% in the third quarter of 2022. In the second quarter, real GDP decreased 0.6%. With the second estimate, upward revisions to consumer spending, non-residential fixed investment, state and local government spending, and exports were partly offset by downward revisions to private inventory investment, residential fixed investment, and federal government spending. Imports decreased more than previously estimated.
The price index for gross domestic purchases increased 4.7% in the third quarter, and the personal consumption expenditure price index increased 4.3%. S&P CoreLogic Case-Shiller Home Price Index reported a 10.6% annual gain in September, down from 12.9% in the previous month. The 10-city composite annual increase came in at 9.7%, down from 12.1% in the previous month. The 20-city composite posted a 10.4% year-over-year gain, down from 13.1% in the previous month. For all three composites, year-over-year gains, while still well above their historical medians, peaked roughly 6 months ago and have decelerated since then. As the Federal Reserve continues to move interest rates higher, mortgage financing continues to be more expensive and housing becomes less affordable. Given the continuing prospects for a challenging macroeconomic environment, home prices may well continue to weaken. In fact, according to CoreLogic's Home Price Index forecast, annual growth is expected to slow to 8% by December and 0% by the spring of 2023.
The Conference Board Consumer Confidence Index decreased in November after also losing ground in October. The index now stands at 100.2, down from 102.2 in October. The Present Situation Index, based on consumer business and labor market conditions, decreased to 137.4 from 138.7 last month. The Expectations Index, based on consumers' short-term outlook for income, business, and labor market conditions, declined to 75.4 from 77.9.
Association released its weekly mortgage applications survey for the week ending November 25. The Market Composite Index, a measure of mortgage loan application volume, decreased 0.8% on a seasonally adjusted basis from 1 week earlier. The 30-year fixed-rate mortgage fell for the third 57 basis points over the past 4 weeks. Further, the refinance share of mortgage activity decreased, whereas, share of adjustable-rate mortgage applications increased. Private sector employment increased by 127,000 jobs in November and annual pay was up 7 points. National Employment Report. Job creation slowed by the most since January 2021, led by construction and other interest-rate-sensitive sectors. Consumer-facing segments, including healthcare and hospitality, were bright spots. As per Nella Richardson, chief economist, fewer people are quitting and the post-pandemic recovery is stabilizing.
Personal income increased $155.3 billion, or 0.7% at a monthly rate, while consumer spending increased $147.9 billion, or 0.8%, in October. The increase in per increases in compensation and personal current transfer receipts. The personal saving rate as a percentage of disposable personal income was 2.3% in October, compared with 2.4% in September. The Personal Consumption Expenditures Price Index for October increased 6% from 1 year ago, reflecting increases in both goods and services. Energy prices increased 18.4% while food prices increased 11.6%. Excluding food and energy, the PCE Price Index for October increased 5% from 1 year ago.
Pending home sales slid for the fifth consecutive month in October, according to Reuters. 3 of 4 U.S. regions recorded month-over-month decreases, and all 4 regions recorded year-over-year declines in transactions. The Pending Home Sales Index, a forward-looking indicator of home sales based on contract signings, sank 4.6% to 77.1 in October. Fed released its Beige Book report. The report is a summary of comments received from contacts outside the Federal Reserve System and is not a commentary on the views of Federal Reserve officials. The current report was reiteration of what has been already talked about at great length. Economic activity being flattish with marginal up or down movement. Economic activity.
Weekly claims for first-time unemployment benefits were 225,000 for the week ending 26th of November, a decrease of 16,000 from the previous week's revised level. The previous week's level was revised up by 1,000 from 240,000 to 241,000. Continuing claims or employment rose to 1.61 million for week ending 19th of November, which is close to the levels last seen in February.
November saw global manufacturing production contract for the 4th consecutive month, as companies were hit by weaker intakes of new business, receding international trade flows and continued optimism about the future and rising finished goods holdings. The J.P. Morgan Global Manufacturing PMI fell to a 29-month low of 48.8 in November, down from 49.4 in October. The PMI has posted below the neutral mark of 50.0 in each of the past 3 months. 23 of the 31, including China, the U.S., the Euro area and Japan.
Perhaps the best piece of news coming out this week was unemployment and earnings figures. Total non-farm payroll employment increased by 263,000 in November, roughly in line with average growth over the prior 3 months and higher than the expected. Monthly job growth has averaged 392,000 in 2022, compared with 562,000 per month in 2021. The unemployment rate was unchanged at 3.7%. In November, notable job gains occurred in leisure and hospitality, healthcare, and government. Employment declined in retail trade and in transportation and warehousing. A more positive data point was that, in November, average hourly earnings for all employees on private non-farm payrolls rose by 18 cents, or 0.6%, to $32.82. Over the past 12 months, average hourly earnings have increased by 5.1%. In November, average hourly earnings of private sector production and non-supervisory employees rose by 19 cents, or 0.7%, to $28.10. Although unemployment staying steady and wages going up are positive for the population at large, yet it only leads to a negative course of action that makes things difficult for the same population going forward. The data over the last few weeks seem to present a reasonable case for slowing down of interest rate hikes. However, with inflation persisting and consumer spending continuing to remain strong, Fed may look at extending the rate hike cycle, albeit with smaller increases. We will leave you with our usual curves on Treasury yields, dollar index and stock market indices. Thanks for watching.